Stocks ended Friday at a record level as investors ignored a key inflation report ahead of the Federal Reserve's final meeting of the year. The S&P 500 rose about 1% to log a record closing high, and both the Dow and the Nasdaq had minor gains. In that key inflation report, the Labor Department's November CPI figure climbed by 6.8% compared to last year. This was the fastest annual increase since June of 1982. But let me assure you, the government will strike hard against inflation. Their first line of defense to fight inflation will be to change the formula so that these kinds of inflation numbers never happen again. Mind you that prices will continue to increase for all kinds of goods and services, but the formula will change and we will never again have inflation figures this high. In fact, if food and energy is removed, if real estate is removed, if education and healthcare are removed, if transportation is removed, and if Thanksgiving, Christmas, New Year's, and Valentine's Day are removed, the inflation figures will be much lower for all of us, and this will make for a nice, safe place for everybody. So there you go. Problem solved. And I'm not even a politician. And with the inflation figures solved, we can now turn our attention to the bad unemployment and employee wage numbers. Just give me through the weekend and I'm sure I'll come up with some kind of formulas to make those numbers look good too. But as sure as the sun will rise tomorrow, I guarantee you the government will change the CPI formula. Mark my words, and it will change soon. And so that's why I look at the charts. Charts don't lie. And we're now looking at the 6-month daily chart on the volatility index using stockcharts.com. And as you can see in the upper left, the symbol is $VIX. Now, when we were talking last time, I thought there might be a hesitation, perhaps maybe a rejection or a move back on up with the VIX. But it looks like the VIX is heading on down and pretty quickly. As you can see here, the peak was above 34 and we're already down here to 18.69, and it doesn't look like we're going to slow down. So things are calming down relatively quickly. In the lower portion of the chart, you can see that the fast line in black has moved on down and sliced right through the slow line. So it's heading on down, heading toward that zero line. There is a bit of power still left in the VIX, so there might be more hesitation, but for the most part it looks like things are calming down, and when the VIX calms down, then the market heads up. Here in the upper portion of the chart, you can see that the RSI as well is coming on down too, so I think that the market is most likely going to continue on up for some time. I would say for a few weeks at least, maybe even longer. But when that time comes, we'll take another look. But for now, the VIX is heading on down, meaning the markets are heading on up. So let's take a look at our charts. I'm going to change things up a bit here with this chart. We're going to look at the 6-month daily on the Fidelity Nasdaq Composite Index ETF. The symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. Now, as you can see here, we've had a pretty decent run. Then we had the contraction, and then we had a nice run there, the contraction, and then we had the move on up with a bit of hesitation here. But for the most part, I think things look good. As you can see back here, there was a bit of a hesitation with another pullback. I don't know if we're going to get a pullback. That's also a possibility, but I don't think that is the probability at this point. But let's go down and take a look at the oscillators. First of all, volume looks fine, but here we are in the MAC, and you can see that we came on down to this point here, had a pretty sharp recovery. We headed on up. The fast line is just crossing over the zero line. It has not crossed through the red slow line yet, but I think that will happen next week. But take a look at this and see how similar it does look to this formation here. We had the move on down, we had the move back on up with the market rallying. It goes sideways just for a little while and then up and through. So here we had a pretty fast move on up, and then it moved sideways just for a day or two with that hesitation in the market. But I think next week we're going to head on up through there unless something happens over the weekend, which is always a possibility. Here into the histogram, things are looking pretty good. This is a very steep move on up, but I think the power is with the market. Into the price rate of change, nice bottoming and basing. You can see how similar that looks to this bottoming and basing there in the September to October time frame. And I'm kind of convinced that the probability is that the market continues on up. That's at least what's showing in that oscillator. Moving on down here into the RSI, we're gaining strength. We're above that 50 or midline at 52.32, and it looks like it came down, but it wants to reflect back on up. Further down here into stochastics, pretty much the same thing, and then the Williams is even knocking on the door to that overbought territory. But the Williams is one of the first oscillators to move, and I think that's what the rest of the market's going to do. We're heading on up here. I think we'll move into that overbought territory, but we're going to hang up there probably for several weeks, if not longer. So I'm not too worried about that move all the way up. Into the price chart, one last look. And I think that's my call for now. There still may be some room for hesitation, but for the most part, I think that the market wants to head on up, at least the Nasdaq. So, for today, that's ChewDog Charts. Thank you.